in some sense, it sort of is mirroring the K-shaped economy recovery. And the housing market is also sort of in a K-shape where there are really fast markets and not so fast markets.
This is definitely a very interesting state to be in. Welcome to our podcast. And today we're going to be talking about the US residential market. And to discuss this with us, I have Ritesh, who heads our mortgage division. Welcome, Ritesh.
Thank you, David. It's a pleasure talking to you about a topic that interests both of us.
Excellent, excellent. So, Ritesh, what's happening with the mortgage rates? People are kind of talking about this being like a reset moment for affordability. So, let's talk more about that.
Yeah, after about 2.5 years, this is the first time that we're seeing interest rates come down. And so there's certainly a lot of interest coming back into the market. Who are waiting on the sidelines are wanting to buy homes now. The refinance activity is back in the market. And so our clients have had the best possible month in the last 2+ years now. October was one of our strongest months. And so certainly there is more affordability in the market. The monthly payments have gone down. There's a lot of excitement.
Excellent, excellent. That's great to hear. So, Ritesh, we were talking about affordability, and the affordability is getting better. Is this fixing the problem, you think, or you think there are still some challenges?
It's certainly helping. More people can afford it, but as we all know, it's a very split market. Different geographies are doing differently. The Northeast, it's still a buyer's market. Home prices remain elevated. In other parts of the country, such as Texas and Florida, which were really hot in the post-COVID era, those have stabilized. In fact, there's been correction. So the home prices correcting in those markets, coupled with the lower interest rate, is certainly making those markets more affordable.
So, Ritesh, what about this two-speed housing market that we are referring to? So, what exactly does that mean?
Yeah, different geographical areas within the country are doing differently. There are some areas where the buyer demand is very healthy, and those markets are continuing to grow very rapidly. And yet, there are other parts of the country where the demand is yet to pick up. The slowness is still very evident. And so, in some sense, it sort of is mirroring the K-shaped economy recovery. And the housing market is also sort of in a K-shape where there are really fast markets and not so fast market.
Right. That's very true because I'm seeing it even in the place where we are. If you look at the Princeton area, the prices are not coming down. I mean, and it still seems to be more like a seller's market. And then a friend of mine just moved out from Dallas, and he's trying to sell his house, and he says, "Hey, prices have dropped substantially. In fact, it's lower than the price that he paid for it."
That's right. I'm in the Texas market and home prices have stabilized. In fact, they're much lower in certain markets like Austin. And we are still waiting for the demand to come back up. So you're totally right. The Northeast is very different from a Texas or Florida.
Yes. This is definitely a very interesting state to be in.
Yes, very different.
So let's talk about this from an investor perspective, people who are investing, especially in the residential market space. What's the implication for them? And I also want to understand a little bit about the policies and how that plays into the market.
Investor activity is starting to pick back up. It had slowed down because of the higher interest rate. Lower interest rate just equals more investor activity. So that is certainly improving it. And, as we know, the investor play in the market revitalizes the market. There is more, homes being bought and sold. So that's a great thing for the market overall. But, supply is being constrained, as we all understand. And what's happening is some of it is defined by the policy. And we've seen policy differences between each state and even different counties. There is certainly, policy to be watched at a state level, at a local level. And, for example, we spoke about the ADUs, right?
Right.
And the ADU development is a very good change, helping with supply.
That's a very interesting thing which is happening, especially in the West Coast, right? In markets like San Francisco and California. Can you explain a little bit more about what actually an ADU is?
The accessory dwelling unit is a unit that can be put on the same lot as an existing home, of course, given the local policies, but it allows for a new house to be made available for a family to live in. And so, improved supply helps with pricing both on rent and purchase.
I think that's a brilliant way to address it because, especially in these high density pockets where there is no space, no land, I think that was a great way to make more housing available to more people.
Absolutely, yes.
So Ritesh, let's talk a little bit about the non QM market space, right? Why is why does it seem like there is a surge with non in the non QM market at this point in time?
Non-QM is outside the purview of the regular qualified mortgage. That allows for a lot of investors to qualify and non-traditional home buyers to qualify for home loans that they did not have access to earlier. It is a very rapidly growing part of the mortgage market, and it gives access to the self-employed, the gig workers, small business owners, and there are very innovative products such as the bank statement product, um, and others which are really amazing products.
Yeah, and it seems to make sense because I think during COVID and a little bit after the COVID time, there were a lot of people who started working from home, and then people picked up other kinds of jobs as well. And I feel that's a great way again to make housing available to a larger number of people who may not be strictly, a W two, qualified just on the W two itself.
Yes, absolutely. The way people work is certainly different than it was 5 years ago.
Excellent. Yes. So about the non QM again, why are we suddenly seeing it increasing? Why is it growing more than it was earlier?
There's a higher investor appetite. The products such as bank statement income computation helps a lot of borrowers qualify now. There are easier underwriting guidelines. Just all of that coming together is helping that market quite a bit.
Excellent.